All right. Good evening and welcome back to yet another session on the live analysis part. This is your host Harsh on behalf of GTCFX. A warm welcome to you all. To those who are joining from YouTube live as well, a warm welcome. And if you do have any questions or instruments to be analyzed, please do type in. I have a habit of toggling between Zoom and YouTube, so we'll try and address your questions right away. Thank you. We are joined with Brother Matthew, Ms. Rose, Mr. Desai, and Rohit Bhai on Zoom. I think we have also been joined by Mr. Ishwar. Welcome, Mr. Ishwar. We have just started, and let me read out the disclaimer before we get started. Thank you. All right, over the counter margin derivative contracts, including contracts for difference known as CFDs and spot foreign exchange, are complex instruments and they come with a high risk of losing money rapidly due to the kind of leverage they are offering. You should consider whether you understand how these products really work and can you afford to take the high risk of losing your money. It is highly recommended that you take some independent professional advice before any kind of investment or trading. And this webinar serves an educational purpose and will not include any financial recommendation or advice. All the wave counts that we are suggesting in the next 45 minutes will be based on the wave theory and for the educational purpose as well. Thank you. Okay, so let's get started off. Let me share the charts with you, please. I think if you're able to see the charts and the audio is also clear, then please kindly acknowledge so we can get started off without any further delay. Price action is steady for the past few hours, and that is due to thanks Brother Matthew, due to some trading hours changed. Maybe got a good Friday today, but we can still analyze and find out potential high potential trade setups starting Euro USD. We'll follow up through gold actually in the second one. Right after the Euro, we'll touch base with gold, and then the dollar index, and then GBP USD, uh, WTI crude, Bitcoin, US 30, Nifty. These are lined up from my side. And if you do have any other charts to be analyzed, please feel free to type in. Oh, all right. I was thought there is hang on. Sometimes the charts get stuck, but we are good. On this chart, what we are seeing, which we are seeing on the euro, that's a 4 hour time frame. I'm just focusing on the 4 hour right now, straight away, because that's where all the action lies since the 13th of January. And we have meticulously followed it to the point. And it's one of the classic examples of what an extended wave actually means. I'm printing 2 degrees of extensions here, 2 degrees of waves, or sorry. One is the minute and the other one is the minute. And in between, there is There is a sub-minute five wave 1, 2, 3, 4, and 5, which is also extend part of the minute wave 3. All right, let me do a quick channel, the Elliott channel, and ideally we are now looking for minute degree wave 4 to decline, produce a corrective decline through the ideally it should be 38.2% retracement, but as we all know, the markets are moving very fast right now, including gold, which being the leader. Uh, I would not be surprised if prices bounce from the 23% as well. All right, so that's the area where we are now looking to focus on the entry side. Remember last week, this time last week, last Friday, we had suggested profit bookings across the board for euro and remain flat. Almost a week has passed now, and you can see how the sideways action looks like. And there's nothing wrong in it because it is not going to move when we want to move. It's going to take its own time. And we'll have to patiently wait for the price action to first decline towards that. I'm counting on the 23% right now, and then a five-way movement is still left. So Euro bulls are still are not done with their job. They are still very much inclined for a push higher. Let me bring up the targets, and then we are all set for the first trade of the session. I think we are now joined. Mr. Amin Bhai has joined. Thank you, Amin, for tuning in. I'm good, brother. And good to see you back. Hope you're doing well as well. Okay, so here is the first trade for this session. We have a limit order in we don't want to commit at this price, all right? So let me please type in because a request has come through email. One of our participant, brother Tolu, has said that it would be better if I keep writing. So potential long, the starting range is 1.1180. It can drift through the 38.2% as well, through 1.0980. So please keep that in mind as well. So I'm giving a range here, 1.0930 to 1.1180. That's the range. This is where we are going to place our stop loss. Just below the termination of wave 1. See, we are buying at a termination, potential termination. We are proposing to buy at a potential termination of wave 4. Ideally, the stop loss can be placed just one tick below termination of wave 1 in case of an impulse, which is already an impulse. It's extending right now. And take profits are here, potential targets. 1.17 and 1.19. All right, so the risk reward ratio is as follows. Here we have, if we average out, this is the risk, and somewhere here, that should be the reward. All right, if we again average out on the reward as well, somewhere in the middle, the risk reward ratio is looking at least 1 is to 1.2, 1 is to 2 actually. right? So buying around one potential buy around 1.0930 and 1180. Please, a general recommendation or a general suggestion is when we are suggesting a potential buy at a lower price, that doesn't directly mean that we are also suggesting to sell right now. It doesn't directly mean that way. We are suggesting to remain flat and allow prices to decline through the suggested buy area. Since the trend is long, we are not, please don't take it as an implementation that if a potential buy is recommended lower couple of hundred points, that means we can sell right now. That is not the actual recommendation. Please remain flat right now. Allow prices to decline to the suggested zone, and then enter on the long side. Predominantly, what we have been doing since last 6 weeks in euro and the dollar index. Yes, brother Matthew, I was pointing to your question. I'm trying to clarify your question because I remember you asked this specifically on Wednesday. All right, so it would be very aggressive to do that. Rather, since last 6 weeks, if you have been following these sessions, specifically from 1.02, we have been calling long trades in euro, and each time the targets have been hit. Similarly, we have been calling short trades in the dollar index, and each time the targets have been met. So please understand. Yes, brother Amin, we can do that as well. We can place it at 1.08 as well. But sometimes minute wave 4, which we are referring to right now, can go as low as the previous wave 4 of one lesser degree. Just to remain on the safe side, we want to start with a technically correct, because this is an impulse wave. So technically correct place to put our stop loss is just one tick below the termination of wave 1. And once we see that first impulse, you see that first impulse orange arrow, then the first thing we do is move the stop loss from this point uh, to that point. So it is a confirmation, it's a double confirmation that the markets have reacted exactly from where we were expecting it to do, and then we are moving our stop loss. All right. I think I've answered it. And if you do have any other question, let me know. We have been joined by Brother Muhammad as well. Thank you, brother. And Amin, bye. I think we are good now. We can go to gold. If you do have any other questions, please let me know. Yeah, no problem, sir. You can call me Harsh. I'm seeing you after a long time here. I think at least a couple of weeks. Okay, let me bring up gold. Okay, there is an explanation in gold as well. I'm bringing up a prepared chart for gold, which we discussed last time. Nothing much has changed, but we need to understand. Okay, let's understand the recent wave, the fifth wave. Okay, let's understand the entire structure first, and then we'll bring to the recent wave. Gold is progressing within the last wave. This is the minor wave, last wave, minor wave 5 over here. It is progressing within the minor wave 5, and the rally started from 1600 mark around October 2022, passing through wave 1, wave 2, wave 3, 4, and now the fifth wave. And if you see the subdivisions, the fifth wave is also being subdivided by 5 waves. No, there is a in between. Sorry for the interruption, but Mr. Amin, in between there was a problem in the YouTube due to some policy change, but we have restarted it since the last. This is the third sessions we have restarted it. So from Wednesday onwards, you will be seeing all the videos lined up there as well. Okay. So what we were discussing was gold is within the fifth wave, and if you look at the subdivisions, because minor wave 5 also subdivides into 5 waves at a minute degree. So here's the circle 1, minute 1, 2, 3, 4, and minute wave 5 is underway. This is one way to look at it. All right. And if minute wave 5 is underway, then that particular target, 3356, was taken considering the fact that minute wave 5 is potentially complete or about to complete at 36, 3356 or 6070 zone. All right. So let's discuss the first scenario on the 4 hour time frame, and then I'll bring up the second scenario, which is extremely bullish. So I'll take a couple of minutes to discuss that as well. But first things, if what we have done here is correct, so if wave 3 was adjusted from that high to this high as an extension, and then wave 4 corrective decline, and then wave 5, you can see that the Fibonacci extensions of this structure, wave 3 and then wave 4, has been met at 3349. That is 3356, 3349. Okay, fine. Let's move one more step further. It's not always that the Fibonacci red line hits and the markets reverse. It doesn't happen all the time. All right, so we just have to look into the other waves as well. Now, if we look at the fifth wave, minute wave 5, that also should subdivide into 5 waves. Now, if you look at the subdivisions here, we've got wave 1, 2, 3, potential triangle wave 4, and the fifth wave. So the extension of this particular wave is pointing towards 3, 3. Okay, that's the target which we did on Thursday. 3375, 3380. This is what I was referring to, Mr. Ishwar, earlier. So this fifth wave might not be complete yet. All right, that is, if I do the wave counts very quickly, we've got wave 1, 2, 3, 4, and the fifth wave is not yet complete possibly, and it might go to 75, 80 targets. All right. Earlier, what we were discussing was on Wednesday, it might have completed. So we were talking about a retracement, a larger retracement. Now, after it pushed beyond 3300 comfortably and looking into the Fibonacci extensions, it is quite possible that one more high is left, possibly towards 75 and 80. So, as far as the trading recommendations are concerned, as we speak right now, there are no recommendations either side. If you are last Wednesday also, I discussed, I think Thursday or Wednesday, I don't remember exactly, but I think it was Thursday. I think Rohit Bhai was talking something about profits. If you are holding on the long side, you might hold and keep it through this 3375 targets and take profits there. If you are not done anything, please do not do anything. Refrain and sit on the sidelines, please. Let us Let us please allow the market to reach 75 and wait for a reaction there. There are two reasons for this. One, the Fibonacci extensions is not met, the wave theory is also not met, and the third, one of the most important indicator which we like following is the diverging scenario. Here there is no diverging. That means there is a possibility of one more high where prices rally to a new high, RSI doesn't rally to a new high, produces a divergence, and that would be a good place to find out a reaction on the bearish side. Now, once it reaches 75, aggressive traders might want to enter shorts there itself. Only aggressive traders. Conservative traders who are looking for price action confirmation, please watch out for a break below 3284. A safe side is to watch out for a let the rally complete through 75, then let the break through 3284 come, and then that is where we want to recommend sell. So only at the third step we would recommend a potential short. All right, so first step, let it rally through 75, let it produce a reaction. If the reaction is there, let it break 84, so 100 points lower, almost 90 points lower. And then after a pullback, it is good to sell. So that would be the potential selling price. But this potential sell price is not right now around 3334. After I'm writing it down specifically, after break below 3284, please, so that there is no ambiguity and no confusion. In this case, if everything is according to the plan, the stop can be placed just above 3375 or whichever high, because no one knows which is the high it's going to print. Okay, once you sell here, the first immediate target would be an extension of that particular boundary. I'm not taking an extension, I'm taking a corrective retracement of the other side. A hypothetical extension or a hypothetical retracement would be 3124. So a very conservative target would be around 3124. Okay. Now this entire short recommendation is for a corrective, keeping in mind a good corrective ABC decline, because 5 waves are complete. Normally after 5 wave complete, there is a 3 wave decline. Okay. We are not saying a downtrend has resumed until this point. Okay, if the price action continues below 2650, if it breaks 2650, only then we can declare with great amount of confidence that gold has potentially topped out. Only a break below 2950 would suggest that gold has topped out and we can only keep selling on rallies after that. Until this happens, this is only a retracement, and after this retracement, another leg could resume higher. Clear? I hope that is very clear now. Okay. Now, the other scenario which I was talking to earlier, 2 minutes back, was if the fifth wave is extending, that means if I move this wave 3 here and wave 4 there, that means the fifth wave is extending, minute wave 5 is extending, and this is only the third wave of minute wave 5. In this case, by the time the 5 wave rally completes, this circle 5 can go all the way towards 35. Where is 35? Okay, I have not taken the extension, but please remember this could go towards 3500 easily before the fifth wave actually terminates. All right. So these are the two scenarios that we are working on. Still, there is no aggressive short recommendation, only temporary short recommendation after these two steps complete. Rally towards 3375, bearish reaction towards 3284, and then on a rally we sell with a target of 3124, and then we say if this is successful, we come out of the short and potentially we will turn long again. All right. I hope this structure is quite clear now. All right. Let's move on to the dollar index, please. Or if there is if there are I will not take much time for the dollar index because I know the dollar index is not being traded by the participants here. Okay, Mr. Ishwar, the second scenario is, let me bring up the chart again. In the second scenario, the fifth wave would be an extension. So not getting into very details, I am simply showing that this particular third wave goes back here, this fourth wave goes back here, and the fifth wave is subdividing. There is wave 1, wave 2, again 1, 2, 3, 4, 5. So this fifth wave would be an extension. Extended waves would be going quite higher. In that case, minimum target for the third minimum target would be 3,500 for the extension. It might go above that as well. Minimum target in that case would be 35 to 3,600 if the alternate scenario 2 comes into picture. Is that clear now? And that would be confirmed because if the alternate count is coming into play, then 2950 would not break. 29 bottom line for gold. Bottom line for gold. 2950 breaks, only then we aggressively sell, otherwise not. Please. Bottom line is 2950. Now I'm bringing up a chart which is done for the reports which we are preparing to be sent out very soon. It will take less time for understanding what the targets for dollar could be. Please remember the drop for dollar index is not complete by any means. The rally for Euro USD is not complete by any means. So please do not aggressively buy the dollar index emotionally. This is a classic case of an extension. You see minute wave 1 here, minute wave 2 here, and then that minute wave 3 extended, which completed around 99. Now, there is a minute wave 4 which is being unfolding, and the prices could rally all the way towards 10. This is 101 2030 mark. All right, so we are not recommending anything right now. We have taken profits last Friday in the euro and the dollar index. Please remain flat right now. Allow prices to rally through 100.20. That is 110 points from here. There is also the channel coming in. We sell there. We can place our stop loss. In this case, the risk reward ratio will not match if we place our stop loss at 1. All right. So in this case, we will place our stop loss just above that 4. That is 103.31. So entry somewhere around 101, stop loss above 104, and the target, this is the target price. Potential targets is 96 or 97 and 94. That will mark up the risk reward ratio. Potential shorts around 101, stop loss around 104, and potential targets around 97 and 94. All right. Dollar weakness is expected to continue overall. All right. Next, I don't know if Rishi is here. Okay, but I'll still cover Nifty because those on the YouTube are watching. There is a demand for a quick Nifty review as well. So, and then we touch base with WTI crude and other indices. Nifty today has tested, or not today, would be off today, but the scenario is almost the same that we discussed on Friday. We have five waves move lower, the minute wave 1, minute wave 2. Okay, Matthew, please do not think about buying US dollar anytime sooner. Uh, the probable price action for the dollar index to go long is between 95 and 97. There is one more larger degree wave to be completed between 95 and 97, and we would have already started a newsletter by then, so we would be in touch daily in that case. So please do not rush to buy dollar index right now. All right, Nifty is five waves down and a potential leading diagonal, and then we've got wave one as well on the long side. So we should rather expect a corrective decline now, maybe on Monday, and then a rally. So this shorts can be taken. Aggressive players can take this short on Monday, but you can cover it around the 22,500, but 24,600 and 25,100. I repeat, sir, 24,600 and 25,100 would be potential very strong resistance for the Nifty as other global indices as well, and that would mean potential short entries can be taken in this range with a stop loss around 26,500 up there, and potential targets around the 19,000 or 20,000 mark down there. All right, that's the quick story for Nifty. And let's now, I think we can quickly review all these instruments which I am showing the charts prepared are going to be included in the technical report that will be sent each day starting very soon. Here is the crude oil chart. There is no change from what we discussed, I think, on Wednesday and Thursday. Crude oil has rallied through the 63, 68 level already now. So the entire structure is a beautiful corrective wave A, B, and C, which is complete at 55. Potential bottom forms at 55 for crude, and thereafter you see that beautiful. This is the pattern, the last pattern, which is an ending diagonal for wave C. Now, ending diagonal normally pushes lower below the trend line, indicating a throw under, and then prices come back to the buy zone very quickly. This is what exactly is happening. So crude oil bulls are back in picture now. Even if there is a correction, all right, I'm still keeping this arrow here. Even if there is a corrective decline, crude is a good buy between 58, 59. And if you're holding on the long side, continue to do so because the first target is 72 and the second target is 81. The first target is 72 and the second is 81. Remember, if this ending diagonal pattern has been identified correctly, then prices would be attracted like a magnet towards the wave 4 of the ending diagonal structure, which is 81. It will not take much time to reach 81. So buy recommendations were already issued earlier. The buy is on. You can still buy on a decline towards 58, 59, or you can split your buy partially now and partially 58, 59, targeting 72, 81 and the stop loss will be just below 55, that is 54.50 or something. All right, that's the story for crude. Bitcoin, I will answer your question right away, Mr. Ishwar. Specifically, again, I am requesting selling gold at this price around 3335 is not our recommendation at all. If you are wanting to sell, please do so with a very tight stop loss above the recent high at 3355. The charts are indicating a clear rally or a potential one more rally left towards 3375 and then reverse. Okay, so selling is not recommendation on the chart that we have reviewed right now. Only after 75 and a reversal break below 3384. Because if right now it breaks below 3384, does not mean a top end reversal. It is a continued reversal. If it breaks below 3284 from here, it is not a top end reversal. It is possible that the top is formed, but the price confirmation in that case will come only on a break below, I think, uh, let me see the chart here. All right, let me bring up the 4-hour chart. If it continues to drop from here, then the confirmation will come only below 3196, a break below 3196, not below the break of 3234, 3224, 3284, sorry. All right, because 3284 is not a support right now. If it rallies through 75, it becomes a support. All right. Okay, Bitcoin. Still, if you do have any questions, always feel free to write an email, sir. I will be more than happy to answer that. Okay, Bitcoin scenario is also it's struggling right now for an extended rally, but Bitcoin has print 5 waves lower. Okay, I had done this on the other side of the bit chart. I think it was Coinbase. Yes, this is the report that we are planning to send out. So Bitcoin has 5 waves lower. One, two, three, neat little triangle wave, four, and then five. So if we go by the 5 wave decline in Bitcoin, we can expect a 3 wave corrective rally. Out of it, the first wave might have just completed. This is a leading diagonal, potential leading diagonal complete of the first wave. Wave B could be forming as a triangle. I think it's A, B, C, D, E. It could be a triangle as well. So maybe it doesn't drop to 80 and rallies from here itself. Going longs are risky and not recommended here. Right now, if it rallies or begins to rally from here, going long should be refrained. Please do not entertain long positions. Wait for a rally to touch or terminate around the 91 and 95 mark and then sell from there with a stop above 109 and targeting 55 or 61, sorry. All right. And then we will again review if we need to keep on the long side or we don't need to sell from 94. But right now we are flat in Bitcoin as well. And the last instrument from my side is the Dow Jones, which again the report has been done. We are going to add 8 instruments in the report, something like this. So Dow Jones major top could be in place at 45,100 and we are now having a potential impulse wave lower. Here's the first wave, the second wave, the third wave, fourth wave, and possibly fifth wave. This is one scenario. Or the third wave is progressing. So fourth wave will not come in picture right now. This is wave one, wave two, and the third wave is progressing. All right, so third wave will come lower in case of an extension. Right now, I'm not suspecting an extension. Right now, we are keeping a five-wave decline as a leading diagonal or as an impulse because wave four is not entering wave one right now. All right, we are expecting immediate targets around 35, but selling on rallies is on cards. We are already short, recommended short around 40,000 with a stop around 45,500. But if it goes to 42,000, please potentially fresh shorts can be taken with a stop around 45,500 and extensions are towards the 29,000 or 30,000 mark. We can keep it open. Bears are actually targeting October 2022 lows. I repeat, sir, it might sound a bit crazy, but the charts are telling us a story. I mean, all bear markets initially they sound crazy. Initially, when we were talking about this wave three breaking lower, it was sounding very crazy. I think sometime in during early March, we had this one and two in place, and prices were sideways over here. And then suddenly, when Mr. Rohit asked about Dow Jones and we opened up the charts, it was already 37 targets met. So it might sound crazy, but bears are potentially targeting October 2022 lows. So this chart is a classic example of sell on rallies towards 42,000, possibly 44,000 as well, unless until prices stay below the 45,500 mark. Dow Jones is excellent to be sold on rallies potentially. All right. So these are the stories from my side, the analysis. If you do have any other instrument to be analyzed, please do let me know. Yes, Mr. Rohit, I know you are a fan of Dow Jones, me as well, and I think it's going to be one of a very interesting next several months to come for Dow Jones. For those who are watching us from YouTube, if you do have any questions, please let us know, or any instruments to be analyzed, please let us know. Or if there are none, then we can bring today's session to a pause here, and I would bring up the slide again. And if you do have any questions, first of all, thank you everyone for taking time out and joining. Uh, Brother Muhammad, Brother Matthew, Miss Rose, uh, Mr. Desai, Rohit Bhai. Oh, Tulwa, Tolu, you are here. I think Tolu, you came in late, brother. You have any questions to be addressed? Please let me know. We have analyzed most instruments that you had sent an email to me. If you do have any, do you want me to review quickly? Do you want me to review quickly, brother Tolu? Then let me know. And Amin Bhai, thank you again for your time. Tolua, okay, thank you very much. All right, thank you so much. Thanks for confirmation because I was a bit concerned after you sent an email. If you do have any questions, brother, do write to me and I will clarify all the trades if you have any doubts. Okay, just a moment, Mr. Desai. Just a moment. All the webinars are listed on GTCFX website. You can find the details from the website as well. And right now, I am pasting all the webinar links here. You can register it. One time registration is enough. You will be registered for all the series, entire series. Okay, Mr. Desai. Uh, in general, US companies are expected to go down. It is a very general statement, but yes, potential bear market is set already. Not only the US, but most economies are going to be affected potentially. And the process has already been started few months back, actually. We are beginning to just see it right now. Please, Rohit Bhai, let me know what's your question. Psychology might be 80-90% of trading success. Means what, sir? Because the okay, because the formula for trading is 20% skills and 80% psychology. Rohit Bhai, trading formula itself is 20% skills, that is any skills that you may have, and 80% psychological or emotional. And that's why we say psychology is 80% responsible for a trading success. I hope it addresses your questions, Rohit Bhai. Psychology is so many things put together. It's not only emotions, it's personal ego, it's mental status. If you're not feeling good about something, again it affects. If you're mentally not fresh, again it affects. If you're hearing a lot of news or noise, again it affects the psychology. If you had a fight with your spouse, it affects so much on your trading psychology. So it is all mixed together. And that's why we are giving 80% weightage to that. All right, sir. Please do write an email at hers.jappi@gtcfx.com if you do have any questions. And once again, I would thank you everyone for tuning in and taking time out. Next session is on Tuesday, English. I think we are starting, I don't remember, but it's Tuesday, uh, 22nd of April. All right, that would be theory. All right, let's bring a pause here and have a blessed weekend. And thanks again, everyone. All of you joining from YouTube as well, thank you so much. And we'll see you again later. Goodbye. Take care and God bless everyone. Bye bye. Thank you, Mohammed Bhai. Thank you, Brother Tolu. Thank you, Brother Amin. Thank you, Ms. Rose, again. And goodbye.